we are seeing signs that China is having a V-shaped recovery. And today, I would like to share with you some of our latest findings. First of all, on the macro side, we are seeing a sequential growth on some of the data points in the past 3 months. A few highlights I have on, first of all, is on the fixed asset investment. We think that the government stimulus, we estimate that is roughly 2 trillion in size, which mainly focus on infrastructure spending, is actually working well and is quite effective. As you can see, FAI has a strong rebound recently. Another data point, which actually is a surprise to me, new home sales figure in May is actually go up by 9% year on year. It's a national number which include more than 300 cities. It shows you how confident the mainland Chinese are right now, and they are willing to spend on large ticket item, even under current market condition. And in contrast, Hong Kong new home sales has experienced a 64% decline in May. Finally, as some of you may not trust the GDP number, electricity production is a good indicator to real economic activities. In May, the production number is actually up 4.3%, which is one of the highest growth rate in the past 8 months. So if you add up all these data points, it actually shows that China is probably having a positive GDP growth, and the momentum is building up quite strongly in July and June as well. Next, I would like to share with you our channel check data on the investment themes that we have heavily invested in. As some of you may remember, we have presented 5 investment themes to you at the beginning of this year Market Outlook event. The 5 themes are consumption upgrade, online service platform, 5G, education, and healthcare. First, consumption upgrade. We are seeing signs that continue to benefit from the rising middle class and also sustainable household income growth. You can see from the chart that the high-end white liquor is doing very strongly. Feitian Maotai, one of the most sought-after brand in China, market price per bottle has actually rebounded to pre-pandemic level and reached a historical high right now. Another example is about sports shoes. The average selling price of a pair of sports shoes in China has actually reached historical high at 335 RMB per pair by the end of March this year. And we have seen similar trend for other consumption goods, and we believe the upgrade story remain quite intact. The next theme is online service platform, and I would like to highlight a food delivery service and online hotel booking. Food delivery is a major category on the platform. Our channel check shows that the daily order volume is above the pre-pandemic level by roughly 20% as of now, which means that it's having a 20% growth. And from the table, you may be surprised to see that the online hotel booking in China is actually doing way better than the other parts of the world. It actually recovers 75% of the pre-pandemic level, even without foreign tourists. It's because China is so big with more than 300 cities, and there's a strong demand for domestic travel, both leisure and business purposes. So in some way, this demonstrates that China can actually rely on its own domestic market and should be even doing okay, even if China gradually will become more of an isolated countries because of the worsening US-Sino relationship. The next theme is 5G related hardware companies. And you can see from a chart that the penetration of 5G mobile phone sales is increasing on a month-by-month basis, even during this difficult period. And although the 5G network rollout may be delayed, and we still believe that there will be a lot of demand from new applications such as smart cities, autonomous driving, and industrial IoT. So overall, we think that the investor may not have fully recognized the potential, and therefore we are seeing that the valuation of Asia-listed technology companies still trading at a relatively low level in comparison to overseas or US listed peers. The next theme is education. As you may know, COVID-19 led to a demand and supply shock, resulting in a lot less overseas order to Chinese exporters. And that actually leads to rising unemployment. So in April, the Ministry of Education announced to increase the higher education enrollment quota by an additional 1 million admission this year and another 1 million next year in an effort to ease the employment pressure. The government is also trying to give out student subsidies to pay for the tuition fee. So as a result, the number of students who enrolled in privately owned colleges and universities this year is forecast to increase by 25% to roughly 2.8 million students this year. So COVID-19 is actually benefiting the sector to some extent. The next theme is pharmaceutical sector. It may actually to your surprise that the sector was also affected due to the lockdown in China. Drug sales has fallen by 8% in March. But as you know, China is first in, first out. So drug sales has quickly rebounded to 15% growth in May, the highest growth rate for the past 28 months. So all the figures I've shown you has somewhat reflected in the share price. And I have listed out all the major themes we like and also the key stock contributor in each of the theme. This stock is actually our top holdings of our flagship fund, and most of them has outperformed our benchmark indices by a huge margin. You can see on the table that some of the stock have actually gone up by more than 50% year to date. So to conclude, I would say that stock picking is very crucial in this environment, and investor will be rewarded with significant outperformance, especially when there's abundant global liquidity. The 5 themes are secular trend happening in China. They share common features: good earnings visibility, benefiting from this economic structural changes in China, and having relatively less impact from economic slowdown or trade war. The 5 themes actually take up more than 60% to 70% of our flagship fund exposure.